We'll start with the cautionary notes here and just observe that we are making forward-looking statements. We are advancing the Beartrack-Arnett Gold Project located in this great state of Idaho. Those of you who are not familiar with us, I'll just summarize quickly. We are the largest past-producing gold mine in the state of Idaho. We are gold only. We've got a 3 million ounce resource of gold, and it's one of the highest grade deposits of gold in the state, including some very interesting new high grade that we've outlined over a 1 kilometer strike and spoke to just about a month ago in one of our releases. As Tina said, we've got this PEA on the first phase to restart the operation at Beartrack. And I'll talk about the infrastructure that's available to us. Another unique aspect about Revival Gold is we've got not only a brownfield site to work with, but all this great infrastructure, including an ADR gold processing facility. We're led by a veteran team. And I'd say that, to Tina's point and comment to Ben and to Governor Otter about the Canadian vanguard, there is a lot of talent in Canada around new ventures in exploration and mining. And certainly Idaho has attracted a lot of Canada's best, people like Steve Quinn, Cal Everett, George Salmas, and indeed our team. And I'll speak to some of our backgrounds in a moment. Lots of analyst coverage on the stock with significant re-rate potential obvious from their price targets. I won't dwell on Idaho. We've heard a lot about the state. We're in the eastern part of the state, about 5 or 6 hours drive east of Boise, the capital. Summarizing, we've got a 14,000 acre land position. It's been assembled over the course of the last 4 years. We've got this 3 million ounce resource, about half of which is in the indicated category and the rest in the inferred category. I spoke about a high grade zone within this deposit, but the entire strike is now outlined over 7 to 8 kilometers of favorable structure. So we've got a big mineral system here. The first phase is a relatively interesting 72,000 ounces a year. Low technical and execution risk, which I think is key as we think about these projects and these juniors in this environment. It's really important to be focused on that. And one of our key strengths is that we've got a team that has actually operated this mine before. So it's not the case that we just sort of landed in Idaho and said, let's build a mine. We actually came to Idaho not just with the project in mind, but with the team in mind. And I'll speak more about that in a moment. What's really exciting about this project is our exploration potential, though. And we've got this large mill phase that will follow the initial open pit heap leach operation. We're trading at about $11 an ounce in the ground, $50 million market cap. $50 million of market cap is equivalent to about the value of the infrastructure on the project today. So you think about this from a risk-reward point of view, there's a ton of upside in Revival Gold today. And we're sitting on $9 million of cash to continue to progress the project. Here are some stats on that first phase heap leach I've been speaking about. $100 million of capital. As I've said, and as you can see from this picture here, we've got a great head start in terms of the infrastructure, but also in terms of the permitting. And Sam touched on the aspects of permitting and the advantages of having existing permitting pieces and all of the background baseline environmental data available for restart. Certainly that's the case here at Beartrack, where we've got 30 years of baseline environmental data, and we've got all of this infrastructure ready to be redeployed. Importantly, this first phase of the heap leach operation is only going to use about a third of the resource, so we've got a lot more to come. Here is a picture of our overall capital at $100 million, which I mentioned earlier. But what I want to point out here is that 38% of the estimated capital is in indirects, owners, and contingency costs. So this is a very comfortable number that we have here in terms of our CapEx. A total of only about $200 an ounce of gold to be produced. So that ranks us very favorably compared to our peers in terms of capex per ounce of production. Some further project details here. I won't go into all of them, but what we've done is scale this operation very much the same as what we had the operation had been working at in the past. And so that, again, lowers technical risk. Similar kinds of grades, similar kinds of throughput, similar approach to crushing. And we've got a lot of data around that to support the technical study that was done by Wood PLC and released just at the end of last year. Here's a bit of a layout map that describes the configuration. Essentially, what we've got is a plant located at the apex of our property position and 3 pit locations, including 2 in the main Beartrack trend over here to the right of the slide, and 1 which is a satellite deposit, which is over here on the left. I keep talking about infrastructure. Here's a picture. We're on grid power, and really it's important to point out, particularly in this era of ESG focus, that Idaho has a very high proportion of hydropower. So this is carbon-friendly power. It's 5 to 6 cents a kilowatt hour, which makes it very favorable in terms of operations and operational efficiency. Stepping back just a moment to put ourselves into perspective, this chart on the left describes the available independently owned and undeveloped open pit gold projects in Canada and the United States. And here you can see Beartrack-Arnett. Even though we have only just started with our exploration, we are now ranked in that top group of deposits. We are 100% gold, which separates us from our peers, and we're in the top 5 in terms of grade. So many of you will recognize this curve, the classic Lassonde curve for value creation in the exploration and mining business. We are riding that curve in 2 ways at Revival Gold. Firstly, through the development of the heap leach project, and secondly, through exploration as we continue to grow the large mill project potential from Beartrack. And I'll show you a little bit about that exploration potential here. Firstly, our property map. We started out with this 5-kilometer trend drilled down to 600 meters and open at depth. But we've also got high grade in the system, including 71 grams over 10 meters in the Wards Gulch area. And as we continue to explore, just this year we outlined a 1-kilometer zone in 14 holes with 4 to 9 grams per ton over a 1 to 5 meter true thickness, and open to the south. So we're continuing to add strike, we're continuing to add to the grade and build on the resource potential on the project. But we've also got anomalous gold undercover further south, another 2 to 3 kilometers south in what's known as the Rabbit area, where we've got a couple holes, initial holes in there now, and we've picked up sniffs of gold to the south. So lots of exploration potential along the main trend of mineralization on the Beartrack side of the property. Over on the Arnett side of the property, the left block of the property here, we've got this 2-kilometer diameter magnetic high that sits under, lo and behold, an oxide deposit here at Haiti. This is the satellite deposit that feeds our PEA. In the latter years of that PEA, it's open in all directions. And you bet we're going to be back in there exploring, drilling this year. I want to point out one last target, Roman's Trench. On the way from Haiti to our ADR facility in the apex of the property, we've got this wonderful project that we haven't yet drilled. There are some historic RC holes there of 1.9 grams over 21 meters, 1.95 grams over 18 meters, and we're itching to get back into there. And it's just illustrative of the number of targets we have at Beartrack-Arnett and the number of opportunities for exploration and exploration growth. And here we have a section through the Haiti part of the deposit in the Arnett side. This is a cross section. The pink shading it tells you where the gold is in the block model. We drilled 2 holes on the outside of that block model last year, and came up with some fantastic results. Points to the deposit being open and up dip to the east. And of course, we've got a hole completely out of the resource to the west. And so we'll be back in following up on that. Clearly potential to add to the pit at Haiti. And it's important because each year of cash flow in that PEA is $30 to $40 million. So, just adding a 2 or 3 year to the mine life will have a significant impact on that PEA. Here we are in the main mineralized trend at Beartrack. Those of you who have been following us know that we have 1.5 grams per ton in the open pit at surface in the indicated mill resource. We've also got high grades in this deposit, but where we're focused today is down in the western end of the project, where we've got this 1 kilometer trend of high grade potential. And here's an illustration with some of the intercepts. The main thing to point out here, we've got a kilometer of trend. You can see in the background of this figure the infrastructure. So this is not something that's located out of the way. It's right smack dab in the middle of our property position. You might ask, why did the prior operator leave it behind? Why didn't they do anything in terms of following up on this deposit, which is open? And the reason was simply that they were focused on the near surface potential. And in today's environment, there's a lot going on in underground mining and a lot going on for Revival Gold in terms of the mill potential for this project. It's one of those beautiful situations where we've got the infrastructure, we've got the capability to go back into production, and we've got this wonderful exploration potential. I want to talk about the evolution of the Beartrack deposit because it really speaks to the efficiency and the beauty of this project. We've hit in every drill hole to date. Started out in 1996 with this model here. At the end of the mining cycle, actually mining carried on until the early 2000s, but the resource development stopped right about here. And there was follow-up drilling. And of course, the deposit grew, and it grew again in 2000. When we put our resource out in 2000, it was a 50% increase over the prior resource that we put out in 2018. We've hit in every drill hole that we've drilled on this project. And the result is a $5 an ounce discovery cost. And so if you kind of put these things together, $50 million market cap, $5 an ounce finding cost, 72 million shares outstanding with not one consolidation in our share price, our capital structure, you can see that this is a team that's focused on value for shareholders and delivering the best that we can for every dollar we spend. And here is that team. I'm a mining engineer by background, been in the industry for 30 years, more than that now, and have delivered a lot of value for shareholders over the course of my career. Our non-executive chairman is Wayne Hubert. He too has delivered a lot of value for shareholders over the course of his career, taking Andean Resources from 100 million market cap to its sale to Goldcorp for $3 billion. Other members of our team have all in their turn done this before and done this with projects like Beartrack-Arnett. In the case of Pete Blakely, our general manager, he's the former general manager for the operation. So this is a team that can deliver for shareholders, has delivered for shareholders in the past, and will do so again in the future. We won't pause too much on the ESG, except to say we are a site that has been awarded for our outstanding accomplishments in reclamation and in operation. And we at Revival Gold are carrying on that tradition today. We take very seriously our responsibility for the environment and for the community in which we work, and we believe that it's a win-win for all concerned. Capital structure, I alluded to a moment ago, 71 million shares outstanding. We are largely institutionally held at about 40%, with Orion Mine Finance being a major sponsor of the company. The equity research that's on the company extensive, and invite folks to get in touch with us if you'd like to receive copies of any of that. So what's next for Revival Gold? Well, this year we're exploring with infill and exploration drilling. We just announced a 5,000 meter program, which will get underway in May, starting in that high-grade Joss target. And then we'll go over to the oxides at Haiti, and we'll continue to work there. We are going to be having a resource update at the beginning of next year. And as we do those things, we are continuing with the engineering work. We've got geotechnical engineering underway, metallurgical test work underway, environmental planning underway. And that will lead to an updated study, a PFS on the heap leach project, which will culminate for us in a production decision by the end of 2022. To summarize, veteran team, we are 100% pure gold. We've been growing this deposit at a quick pace, $5 per ounce in the ground. We are a tight capital structure, efficient spend around what we're doing. It's a proven property. We've got the benefit of all this infrastructure, including an operating ADR facility, which will lower the risk related to the CapEx associated with restarting this operation. It's a meaningful first phase that we're going to develop, and yet the capital on that is relatively modest at about $100 million. And then we've got the growth potential. It's a compelling opportunity overall. I encourage investors to get to know Revival Gold. Those that don't, please feel free to reach out to us at any time, and you can find us at our website and social media. Happy to take questions, Tina, if there are any at this time.
Thanks, Hugh. That was a great update. I think maybe it would be good to just clarify the timing of when you release the PEA. There's a question about when you expect first gold pour, so give a little bit of a sense of what that PEA really means.
So the PEA was completed at the end of last year. The next step for us is a resource update early 2022. We'll complete the PFS with the engineering work we're doing in the background now by the end of next year. And that will set us up to make a decision whether to press the button and go on the first phase heap leach project. So at that point in time, we'll be submitting our plan of operations to take the project back into production. And of course, there's a lot of work going on in the background. We're engaged with the various agencies. We are advancing all the steps required to position ourselves to restart the operation at Beartrack. The mill project will be a longer-term plan, but we're talking about something that would be 300,000 ounces a year. So it's a big project, and there'll be a big budget around that. And what we like about the way that Revival Gold is set up is that we can advance on a capital-efficient basis with the project in the first phase, while at the same time continue to progress that larger project. And to the point that's been made early on, can't reiterate this enough. The pace of global gold production today is running at about 110, 120 million ounces a year. There are no or very few new growth projects to feed that pace of production. By our count, it's something like 30 or 40 million ounces a year coming online and being discovered in the first place. But to come online, to go through the permitting stages, all those things, and to do so in good geography. That's what makes this unique.
Yeah, and I think one of the maybe misconceptions, which you addressed in the presentation, but the PEA is still a very small portion of not only the current resource, but the upside potential of the resource. So I think the PEA's throughput is 72,000 ounces.
That's correct. Yeah, thanks for pointing that out. We're using about a third of our resource. We see potential to expand that PEA from a 7-year mine life, just in what we see from our drilling last year, to perhaps 9 or 10 years. And at $30 to $40 million a year of cash flow, that's our market cap in every year of discovery in the new in the new update that we might come up with. So there's lots of leverage in this stock, both in terms of what we already have, in terms of what we can add to the PEA, and longer term in terms of what the bigger guys are looking for. And we certainly do have those circling.
And it seems like you're starting to connect some of the zones as well as you continue to drill. Can you talk about that a little bit and what that means for the economics?
Oh, it's really exciting. We're in what's called a orogenic gold system, and what we see in that system is a lot of continuity, both vertically and horizontally. And well, it's not possible to connect the drill holes for the purposes of building inferred resource, measured or indicated resource immediately with the step out holes that we've been doing. They certainly point to the potential. I mean, you do not have a plus 5 kilometer strike length system like we have without a lot of gold. There's been over 4 million ounces of gold produced or discovered from this area. We think there's a heck of a lot more. In fact, our geologists internally are targeting a number which would put us over 5 million ounces, just to give you a sense of how confident we are in terms of the potential from this deposit. Now, it takes time, and you have to go through all the steps, but we've got A-class consultants, we've got an A-class team, and we're taking this forward on a very pragmatic basis to deliver value for shareholders.
And what about the grades? Because obviously some of the recent drill results have shown pretty significant grades. Do you see that trend continuing? And obviously you're going to be focusing on Joss as well, which has had some high-grade intercepts.
Yeah, I mean, grade is king. We are focused on grade, and so yes, those first holes this year will be in the Joss area. Where we've got intercepts 5 to 9 grams, it's that kind of grade that built up over a kilometer of strike can really add to the value of this project.
That's great. We have a question from the audience. Have you thought of re-injecting solution into the heap leach before restarting to stimulate recovery?
Yeah. So thank you for that. That's a great idea. And the other thing that we're looking at is high pressure grinding. There's been a lot of developments in heap leach technology since Beartrack was in operation. Some folks have pointed at our heap leach pads and said, geez, that's 200,000-300,000 ounces right there that you could reprocess. You're absolutely right. It's something we'll look at, and it's part of the engineering work that is going on this year with the Met Lab at SGS Labs under Wood PLC's direction.
Right. I think that's one of the takeaways is, you have this base case PEA scenario, but there's ways to optimize. The resource is much larger than that. You can continue to build out through drilling. So I think there's still a lot of upside. And as you mentioned before, your market cap is the value of your infrastructure currently. So it doesn't reflect cash. It doesn't reflect a 3 million ounce deposit that's already there. So what do you think the market is missing, and how do you expect to kind of close this valuation gap with some of the other issuers?
Yeah, well, part of it is just the fact that we come from big companies. We're not from the junior space. We've got a lot of guys who are in the space who are busy on social media, busy promoting amongst the retail crowd. We are largely institutionally held. We are building this company for value in the long run. I myself, I'm a big shareholder. The rest of our team together, we own about 11% of the business. So we're focused on not where we are today, but where we can add value and build value for shareholders in the long run. We're busy working on that. We've got one of the best boards in the business. And believe me, they are focused just as keenly as management on delivering value for our shareholders.
And I noticed that you have a new CFO on board. Can you tell us a little bit about her background?
Well, there's an example, right? We've just welcomed Lisa Ross to the team. Lisa is part of this move for us towards building a team that it can credibly build and carry forward with the first phase operation at Beartrack-Arnett. She is a 20-year veteran in the gold mining industry. She has been part of building heap leach operation in the Congo. So if she could do it there, she can certainly do it in Idaho. And she's a former colleague of mine from Kinross. So we know each other very well. She's delivered for Kinross, for Kirkland Lake. She was part of building that company earlier in her career. So we've got not just the operational team, but we've also got the financial and administrative talent to be able to take this project forward and credibly build a winning business.
Yeah, that's great. And I know, like you said, management's obviously got a great history and well versed and not new to the mining space. So it definitely helps to have some experience on the team. Before we finish up, I'll just leave it with you to kind of summarize some of the catalysts. I know you've got the 5,000 meter drill program coming up. What can investors expect for the rest of the year?
Yeah, drill results. That's the main focus for us this year. We are cashed up, so we're funded for our programs for this year that I've been talking about. We're going to be out talking to investors and getting the story out. We've got a number of initiatives in the engineering side as we carry the project forward towards a resource update and a PFS. Those are the longer term objectives that investors should be focused on for 2022. And we think that this is the right combination at the right time. Gold price is in a bit of a lull right now. It's a winning time to be loading up on Revival Gold.
Yeah, and I mean, we've been talking about Idaho all day, obviously, but it seems like it's ripe for consolidation, and we've seen some M&A already and some strategic investments. Any last thoughts on that?
Oh, yeah. I mean, I think this industry has got a ton of opportunity around consolidation. And, our view on that is continue to look after what you're looking after. You can't look over your shoulder at the thundering crowd coming after you. You just continue to add value, chip away, and build the best you can. And we're going to make money for our shareholders. We've done it before in prior lives. We're going to do it again.
Well, that's always great to hear. Thanks so much for joining us, and good to get the update.
Thank you for having us, Adelaide Capital.